Hey, all, welcome back. Nice to have you here for our class today, Markets and Sectors. We're going to take a look at some of the sectors and what they've been shaping up, what they've been looking like. Of course, we want to look at the markets as well, specifically what price patterns might be out there on the market that traders, investors could be focused in on. Again, I want to take a look today. I don't want to say again, we have looked at it before, but I want to take a look at a proprietary indicator that we do use here on the thinkorswim platform, specifically to look at market direction. So I want to jump into that today, compare amongst a group of other indicators that we'll go through, but I definitely have my eyes open. I want to say my ears open, but folks, it's a one-way stream here, right? It's just me talking, but I've got my eyes open on the chat. Any questions, comments you have, love to have you send those into the chat. I just love to see the comments as well. If there's anything you'd like us to kind of discuss as well, be happy to do that. I'm joined in the chat by Cameron May, who has, for us, put in both of our Twitter handles, X handles. Follow us both there. Mike Fairbourn CS, Cameron May CS as well. Love to have you on board. Folks, let's jump into some disclosure items so we can get the show on the road. Okay. Oh, let's see. I'm just going to check out one thing here, folks. In fact, what I should probably do is, let's see, is that not, I'm just going to make sure we're sharing, folks, and just give me 1 second on that. That is my issue there. And oh, that's interesting. It's got a little, is that looking okay there? Oh, all right, everybody, welcome back. Well, hey, let's go ahead and check out some disclosures and get started here. So information here is for general information purposes only, should not be considered an individualized recommendation or personal investment advice. Now, the paper money software application is provided for educational purposes only. Investing does involve risk, including the loss of principal. Please keep that as well as other points listed here in mind. Futures and futures options trading are provided by Charles Schwab Futures and Forex LLC. Now, with that, also just a final note here, past performance of any security strategy does not guarantee future results or success. So with that, let's dive back on into it and take a look at a few different things. I think many of you are probably pretty familiar. You've looked at the markets quite a bit. We're going to try to look at, some of the internals behind the scenes and see what we've got just on a big picture perspective. Now, a couple of quick notes. This was a new high range that we had, obviously, in the S&P 500 index, all-time high range. And with that all-time high, at least over the 1 year time frame that we're checking out right here, what do we have over here? Advancers and decliners. Strength. We're showing advanced decline lines still moving up and continuing on. Well, it has continued up. It's almost kind of like basing, you could say, a little bit through here. And that is also could be construed as a positive as we look at the markets here. There are a number of companies out there within the S&P 500 index, some of the larger companies that do look a lot like the S&P 500. I sent a tweet out earlier, Cisco. Just take this off. That was just a little note seeing if we would get a K hold today on Cisco, but does it look familiar? It looks somewhat like the market, right? A lot, though, what we're looking at are companies that are still reporting earnings. I'll shift back to the markets here. And that's going to be just a highlight, just to still note. There is the calendar. These are S&P 500 companies. And what do we see, though? We see some companies in here, but basically it is starting to tail off. We've had a spike into earnings, and now we're kind of on the backside of the earnings, Q3 earnings announcements, and they are coming down. You're still going to see some of those out there, and they can still impact the markets. But just be mindful of that as we look at some of these companies. That's a great way just to see what's out there in the market in the 500 that could also factor in to the S&P 500 itself as well. But the question is will this market extend higher? Well, one thing we could say, we've talked about it clearly, there is a trend in here. And in fact, I've put a longer term trend. If I'm going to show you a 2 year, these can be really, really helpful because they can help to define, in a sense, kind of give you a structure of the trend. And notice what I did. I took this all the way back to basically 2 years ago, right there. Very close to it. This was like December of 2022. And I've drawn a line in here that kind of mirrors sort of the mid-range of this upward sloping channel. Now, this can be helpful on a number of different fronts. One thing is you can extend off to the right here the time. We know we can do that on the charts. In fact, if I click on my wheel up top, I'm going to click on the time axis. I'm going to extend this out pretty far. I'm actually going to go out. Let's more than double that. I'm going to go 75 bars. Now, it's going to scrunch everything, but it can give us a sense of generally the direction that this line has been moving. And now what I can do, I'm going to go ahead and activate this and just simply extend it up to that level. Okay. Now, we have, as of late, been operating above kind of this midpoint line. Some would refer to this as a reversion back to the mean. It's kind of the mean of, and it's just, I've drawn it in, but it's kind of like a mean of the range itself over this time frame, right? I'm going to show you one here in just a second. It's called linear regression, but it will show you what the reversion to the mean looks like. And sometimes if markets are strong and from the bottom of this range to the upper end, we've been spending a lot of time above this level. So if we look at it and we just kind of draw another trend line to help give us some indication of where that upper line might be, all I'm simply going to do from my midline is now draw a line off the top of these. And I'll go to this one. And this really touches off the body of many of those candles as well. But do you see right there? It's kind of an upper channel line right there. And so expectations, possibly, we've come up and we've bounced off this a couple of different times, but we've gotten close to it more than that. But if we're looking at the end of the year and we're saying, yes, trend in effect, we know that because we just came off a high. I can draw this a little bit better, hopefully. There we go. The trend is up. We're pulling back. We're maybe holding at support right here, possibly. But look at these levels right here. That is the end of November right there. That is the end of December. We get it just to that level. Folks, are we above 6,000? Are we above our all-time high range? If we extend higher, we in fact are. And all we're simply just using here is just the kind of the longer-term structure of the trend and using trend lines to kind of assist us here and saying, yeah, if we bounce up higher, look at these levels. It's not to say that we can't get above there or below that level, but this has kind of been what's been happening all the way back since, gosh, I slipped. That's my mouse slipping off. There we go. Since about March. So all I'm trying to do here is give us maybe some indications of where we can, maybe at the end of the month or somewhere through there, where some of the high points might be. We've looked at seasonality. We've seen how seasonality can continue up higher. If I just quickly pull that up and do the same thing with seasonality over here, notice over here with seasonality, and we beat up seasonality pretty good in this class, but you can see my upper channel lines. Well, what if I just did the same thing over here, maybe a little bit more recent, but towards the end of the year? See, there's still an upper slope over there, and perhaps we could see something like that. We don't know, but will it act like a seasonal kind of a rally? Maybe we have some extended range, upside range, to kind of give us some indications of that. Now, I did mention to you that there is a really cool indicator to help us with this, and I'm actually going to take these off. I'm going to keep the midline on because I want to see how accurate I was with linear regression. So let's just go ahead and pull that on right now. And what this does is it gives us a measure of the price ranges for the structure of that trend, where let's say a reversion to the mean might be. Now, I've clicked on the dropper, the flask icon, and I'm just going to pull up linear regression right now. I'm going to pull it up and I'm going to show you what this looks like. I think it could be the curve. I've always used this 100 one. Let me just double check and see what this looks like. Yeah, there we go. How close was I? Very close. You can eyeball these. Do you see where I was at? This goes back even a little bit further. The midline, you can actually pick it up right there. I didn't know I'd be that close, but I'm very, very close to the middle. Do you see that right there? That is the regression to the mean type of line. Now, it does have these extended levels that go back even further in time here, as you can see, and it says this is really kind of the upper range right up top here where prices can go. But this has kind of been a projection of the mean itself. And look at this touch point here. Interesting. We broke below it there. We kind of held before we broke. We held there. We held through much of this area as well. resisted. So that is fascinating. But the red line does mirror the line I just kind of eyeballed in there. And this is really kind of helpful because some of you do look at different sorts of trades, whether they be short-term in nature, whatever the case might be, but these can be interesting target levels. Notice up top, this will happen sometimes with the linear regression. You see that upper line and the midline? Folks, what's the midline between these two? Right there. I'm going to just kind of draw it in. And notice how close that midline is to the high points. So expectations of prices moving up. If we do see strength, because we do have the trend up, a seasonal kind of strength potential towards the end of the year, and the possibility of a flag pattern with a K hold in a number of different stocks, well, what happens? Could this be an area where people say, that's my target? If it hits that level, the market hits there, I might take off some of my stock positions. That's what the linear regression line can be useful for. That's one way that a lot of investor traders use it. And by the way, another way they use it is this. If prices come back down below there, the very minute that they trade back up above that level, because this is kind of considered to be like the reversion of a mean, is how some traders will use this indicator. That's like kind of one of the main ways to use it. If that occurs, then what they'll do is that's where a potential entry point could possibly be. So I'll just put over here entry question mark, because that could be an entry point. So that's the whole point of the shorter term kind of moves with maybe some momentum. Entry, 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 entry is what they might be looking at if they were using a reversion of the mean and then bam, slam and break out back up above that mean. Okay. Also, if you get one off the bottom, that could be something similar too, or the midpoint between these two ranges right there. Notice that touches right there as well. Okay, so just wanted to share that with you. It is kind of interesting. Now let's do this. Let me see if there are any questions coming through. It looks like Cam's got us covered in the chat. Perfect. Okay, good. Yeah, you should be getting, sound. You guys getting sound okay? I think the sound looks good. Yeah. Okay, good. There might have just been one individual. By the way, just refresh your screen if that's the case. Refresh that YouTube link. All right. Well, let's continue on. I wanted to discuss a couple of different points as we go ahead and take a look at some of these other features here too. By the way, we did dip below. If I'm looking down below here, our McClellan oscillator did get below the minus 100. If it gets back up above the minus 70, do you see how that sets up? Let's really scrunch this down. I'm going to take off my linear regression. This is only on a 6-month time frame, but let's see, remove that. There we go. Okay, if we are now looking at McClellan, which has been really quite helpful in this upward trend that we've seen, at least more recently. We'll see if it unfolds this time as well. But we did tick below that lower red line. And how traders will use this, you can see over here, it says minus 104. We are actually below it again right now. Question is, did we get back up above 70? Minus 70, that is. And right there, we got to minus 80. No, the number we got to reach is a minus 70. So we got as high as a minus 80. Going up off the bottom, up through minus 70. We did not get there, though. If we do get there, which we might get if we start to show a little progress here, but according to the McClellan oscillator, for the NYSE, we could start to see a progression if you get back above that minus 70. Again, that's 2 to 3 weeks. And does that make sense in the format that we're looking at right now? Does it make sense? 2 to 3 weeks of a rally. Well, it kind of does, technically, because we are looking at a pattern. We'll see if that unfolds. But there's kind of a flag. We saw seasonality towards the end of the year. That could cover us close to the end of the year, 2 to 3 weeks out in time. That's kind of the minimum range. And so another potential setup here. There's your pullback, right? But there's the bounce. So that's interesting. McClellan oscillator has dipped back lower, but it may shift if this does become a flag type pattern. Okay, a couple of additional points, because here is the equal weight. The equal weight dipped a little bit further down, but generally holding up pretty good. You can see we did have a spike through here as well in terms of some of these levels that you've seen. on the chart. So that was a pretty interesting spike. We're holding above the 50. Now, folks, a quick note. How many of you do use the RSI? Anybody use the RSI? The RSI is an interesting indicator. I've talked about it a lot in my other classes, and I do tend to keep eyes on it because it's an interesting way to kind of measure momentum. It measures closing prices. Now, generally speaking, if on a pullback, like you see up here, and it looks a bit like a flag pattern because we are holding roughly 50% because we're trying to anticipate. Scott, yes. Chris, yes. Riceberg, sometimes. Catherine, yes. Let me give you a couple of different, and cool. You guys are getting me some ideas. Good to know. I use it pretty frequently, but mathematically, it makes sense, right? For prices to go higher, they need to close higher. For prices to go lower, they need to close lower. Glad to hear that feedback there. Let me give you some ideas. Now, a lot of traders will say if you're above the 50, they put a big B there, and they say, what does that stand for, folks? Bullish or bearish? It stands for, if we're above 50, it's going to be bullish. Okay, that's what they say, bullish above 50. Now, I did a class on this in my ThinkScript class where we talked about, and I created a script. And what that was is when you're looking for pullbacks on the flag pattern, how a number of traders, and I've looked into this myself, I've read about it for a number of years, but basically on the pullbacks, the flag patterns, the RSI, at the very least, it should hold. And it, by the way, it bounces a lot of times right near this level, but it's got to be greater than or equal to 40. 40. That can be very, very helpful. I wouldn't even make this point if it weren't. But when you see this kind of a pattern, stock or market, where you're just seeing a series of flags, higher highs, higher lows, watch these pullbacks over here before you maybe get a K-hold or a bounce. Watch these, because if you can hold that RSI greater than or equal to 40, that's a lot of times where they bounce. Go back and prove it to yourself. Don't take my word for it, but and then the other thing is if at any time you're above 50, so if you're above 50, or I'll just say greater than 50, it is in fact just construed as being a bull. All right, it's such a long word. I can't write that all out. We'll just say B for bullish, but that's if it's greater than 50. But on the pullbacks, you should be holding above that 40. And by the way, sometimes it'll go to 39 or 38 and then bounce. You get a K-hold rally. Keep that in mind. Where are we at right now? Well, if I just clear all this off and we say there's a little bit of a flag, are we holding within that range? Absolutely. In fact, some of the stronger bounces, we don't know if this will happen, but they will bounce at an RSI range. Might as well just write RSI. Of the stronger ones will bounce at the near the 50 level as opposed to the 40. Check it out. See what you think. Okay, but 40 is kind of like one of those bare minimums. By the way, the equal weight, yeah, you can see it right there. The equal weight is holding up, and it did have an all-time high. It did pull back a little bit, so I want to take a look at just one more screen over here and look at the NYSE. Similar to the equal weight. Remember, this is a bigger basket of companies. How many in the NYSE? NYA, as we're looking at it here. Let me see. Watch this. Can we do this over here? I think if I go to the scan tab and I do something like this, I can check it out. I just want to know. I think it's 35. Let's see. NYSE. 3,500. Just click on scan with no filters in there. You get your 28 is what it's telling me. So 28 and change, close to 2,900 companies. So it's a much bigger group of companies out there, right? So we've got about 20, but you still see that we're getting a nice little rally up here. But we've discussed McClellan and McClellan here, but we did get a Hindenburg omen spike right there. What is the Hindenburg omen spike? What's that all about? Well, generally when you see the word omen and it's in red, it might not be like a bullish thing, right? And in fact, it is a bearish thing. You're getting a distinct number of 52-week new highs and 52-week new lows in the market, which can create a chasm in the market, and it can create a market crush. Or it could start to pull. In other words, you could get a market change. You could get a lower low and a lower high, a change in trend. Gosh, change in trend is what I was trying to say. But yet you can see that. The best way to view this, though, is normally on a weekly. Notice over here on this pullback, it was a little bit hairy through here. We didn't know what we were going to get. We had 3 in a row. Okay, there were some lows being made in the market, basically. But look at the trend. The trend said, you can wait on that because it was holding prior highs. And again, we're very, very close to a prior high here, clearly holding this range, higher highs and higher lows. So the omen hasn't really set in too much yet. But if you start to see a little bit of weakness, even if you take out a low here, these can be a lot more significant. In other words, they can end up being a lot more meaningful. Let's jump back now and look at our 3-year weekly chart. I like to throw this out because this was a sign where you just started to get some breakage down here on your 3-year weekly. Let's pull this down. And were you getting omens through there? Oh, yeah. For there, if I were to pull this back a little bit further, you get even more. As you got lower here, look at this. You come up to highs, highs, highs. Great indication that the possibility of this trend is going to round lower. When I say highs, these were absolutely lower highs, which makes it even more interesting. We're not anywhere near that right now, particularly as we stand right now. But it's interesting to see that one did pop up, and we did get that one popping up on a weekly chart. Again, folks, this has nothing to do with what makes this so unique and why we talk about it. It has absolutely nothing to do with the price action. This is all about 52-week new highs, and 52-week new lows, and there being a greater number of both. And oftentimes when you get the lows in there mixed with the highs, can be an issue. Okay, there's just breaking down in some of the sectors, which we're going to take a look at here just momentarily. There are the highs, there are the lows. This has been steady. We've seen these spikes with NYSE highs. One thing we kind of want to see that we have been seeing is that, and here, I'll go ahead and show it to you right here. This is painting the purple line behind the scenes here, right? That is the NYSE, or the NY, yeah, actually that's the NYSE. The NY highs are these lines, but we've been able to get above really that 250 level anytime the flag pattern has unfolded. So if we were to get a move that came up here like this and hold below 50, that could be a sign of weakness. We're just not getting the number of highs. And do you see how that could relate back to the Hindenburg omen, right? We're getting less highs, but maybe more lows. And then you just go, okay, maybe the breadth of the market is starting to weaken. That's why we have to go through these each and every week. But right now, it's just been a pretty good sign. We talked about seasonality already, and there is an intraday chart 30-minute. Now, before I go to the sectors, because I do want to break down the sectors for you today, and I actually sent a tweet out, which I'm going to try to do each and every week on the sector indices specifically. Let me show you the market forecast. Now, I've talked about this before, and the thing about the market forecast is it is a proprietary tool that is used, and this is one of the ways that it is used. There is more than one, but this is how oftentimes traders will use it for detection of the market. So really a proprietary tool that we have here on our end, market forecast. I'll show you where you can add it in, and I'm going to show you what we're looking at here. This happens to be, though, the intermediate term line. Again, one of those long words, intermediate, but and this shows the strength, weakness of the market. Let's talk about it right now because we did break lower, and I thought it'd be a good idea just to kind of reference that as we go through it. So having said that, you can see I have it added in here. I can add it in quickly by clicking on the flask icon and just typing in market forecast. Obviously, it'll be, just go market F. It'll be right there. There it is. There is an explanation to it over here. Technical indicator designed to find buying and selling opportunities based on market analysis techniques applied to several time frames. Now, we are going to be using the intermediate. We're only using it for the market. So this is an approach that traders will use. And by the way, this class, yeah, it's about markets and sectors, so it fits in. I would say this, you could also use it on sectors as well. Keep that in mind. You can use it on sectors. Now, it's only one line down here, and it's the intermediate. I'm going to click on the gear, and I'm going to highlight this and show you right here. It's not momentum. I've got the show plot off. I got the show plot off on the near term. It happens to be intermediate term line. I've got it nice and thick so I can see it. A color that you like, or what any color. I have blue on here, and now it's in place. And how this works is if we are above, I'm going to draw a couple of lines in here. I'm just going to say that's 80. And I'm going to say, just below the 25, that's 25 right there. Excuse me, 20 right there. Now, if we are below 80, then the direction of this line matters. If we are below 80 and we are pointing down like we are pointing down, that means the market says, according this indicator says for the market, that it is not giving you the go-ahead for long trades. Now, we can look at this and say, gosh, there's a trend, there's a flag. We've seen some interesting seasonality on average towards the end of the year, which is where we're at right now. And we've seen some decent earnings as well. And we did have, what they're referring to as like the Trump bump right there as well, in terms of the move to the upside. And we've held that bump as well, right? That gap. So there are some positives just in terms of market strength. That's all we're looking at here. Right now, the indicator says wait. So what could we wait for? Maybe, and we don't have this yet, but a close above the high of the low bar, also known as the K hold. We don't have it yet, but if we did get it, sometimes that can be the igniter for the flag pattern to kick in gear. For example, it might be a little bit more difficult to see, but right as we came off that midline, that mean, reversion to the mean, do you see this bar right here? Right there, we just closed above the high of the low bar. That's what that acronym is, close above the high of the low day. Now, I didn't want to get too far out, but away from my indicator, but I wanted to just show you that, hey, right now it's saying, wait for maybe something like a K hold or a bounce. We are not getting that bounce just yet in the market. Anytime this line, I'm going to draw it in black, but if it starts to tick higher and you are above 20, which we are, then the market's giving you confirmation and you could potentially take a trade. A long-term trade is what the market forecast intermediate term line is telling us based upon the way, like I said, a number of traders, investors use it. But the way I'm talking about now is strictly just a market type indicator. So if we get above that level, the other thing I wanted to point out, anytime you're above 80, it doesn't matter the direction of that line. The market's giving you the go ahead, and you can see just large ranges in here of where that's happened. And the market has done what? It's been bullish. Look over here. If I highlight it, it's just been above 80. Look at this range. Strength, strength, and then right there it says, be careful right there. Gives you a little bit of a warning. It says, hey, you're getting a little bit weak. You broke below. It's pointing down. You don't touch it. Look over here. This was really extended. Look at that range. You were above 80 that whole time. And by the way, how did the market do? I would say it did good. I would say it did good. This is how this works. One last wrinkle, and then we're all set on this. If the market forecast line, folks, dips down below 20, if it's below 20, doesn't matter the direction. You don't take any trades. But if you cross above 20, like you did right there, and the indicator is pointing up, then you get the go ahead. So there's kind of like four distinct things. You got the upper range, the lower range, where it's bullish, I'll just say plus, regardless of the direction, and minus if it's below 20, regardless. So again, this is bullish up top, bearish down below, according to the market forecast intermediate term line. And there's the mid ranges there. And it all depends. If you're not below 20 and you're pointing down, that would be bearish. But if you're pointing back up, that would be bullish. Clear? Okay. It's an interesting tool. It's very interesting. And we did just break down below the 80 here. So it's saying, hey, pause, wait. Wait until it turns back up. According to this indicator, could be quite useful. Okay, let's see. Michael, don't we use Hindenburg indicator on weekly? Yes, we do. And did you see me show it? I don't know if you caught me doing that, Thea, but great confirm there. We did. I showed you the 3-year weekly, but I'm going to highlight that in case somebody didn't see it. So good catch there. in case you guys didn't see it. But what I'll do is I'll go over here and I'll flip it to a weekly, the 3-year weekly, and we talked about this right there. But absolutely, good catch. And we did get one too, Thea. We got a weekly Hindenburg right there. We did. What does that tell us? We know it's not a chart indicator. It's not open, high, low, and close. Weekly, daily, monthly data, it does not matter. We're talking about the internals of the market. That's what makes this unique. Okay, good. Let's see. Yeah. Yeah, it catches your attention, right? The Hindenburg. Oh, what happened to the Hindenburg? Mike, I was just reading that. Yeah, fabulous. Okay, yeah, if it happens, then it will follow. Yeah, so a cool point that Riceberg brings up. Yeah, we were talking about this over here, the market forecast. Interesting. This could easily be tied into a seasonal kind of a scenario. By the way, too, I would say, along with what Riceberg mentioned, it could be tied into price patterns, trends, triggers. For example, setup triggers that some people would refer to as a setup trigger, like a K hold, or a bounce off the bottom, or a trend line break. Or what's another one? Here's one for you on a short-term basis, and that would be this right here. You've seen this before. Oh, you've seen it. I don't even have to type it in. It's right there. How about a 10-period moving average right there? When we break above the 10 period, sometimes, particularly on stocks, sometimes the 20 is a little bit better for companies that have, I should say, indices that have 500 stocks in them. But if you look over here, look how much price action occurred, folks, as we were above that 10 period moving average. So some traders also tying into other indicators, right? Kind of branching out and saying, where are my probabilities that are totally unique and totally different? Where do they all stand? Do I need to be concerned? Is it a time for more bullishness based upon, the way I'm perceiving these indicators or whatever the case might be? But like, say, for example, might not have a K hold, but look at right here. Even a K hold requires a bounce above the 10 period moving average too, if somebody was looking to be bullish there. Okay. Good catch. Yeah, I like how you're building up on these. Yeah. Does the time frame matter when using the indicator? Yes, good question, Beauty. This is for the daily time frame. Yeah, this is just daily. Let's go ahead and take a look at this over here. NDX is only for the daily time frame. All right, and so with that, keep that in mind. But such an easy indicator for what it allows us to do. Okay, I'm gonna as we're kind of entering the home stretch here, I want to just point this out to you that I sent out this tweet here right there. And it was just on sector indice strength. And one interesting thing you can do when you get the grid, and just consider this, is we've looked at some of the markets, and as we look at where the strength is at and what sectors in the market, one thing we could do is we could actually look at, over here and just say, well, how are each of these 11 sectors doing in the market? You guys, I think you have this. I've shared it. Let me know if you still, somebody doesn't have it, because you might be new. But right down here, if I pull up my sector grid, it's such a cool way to look at that grid that you can just say, and I'll show you exactly what the tweet had. Like, for example, over here on energy, I said this. I said, breakout. Oh, I'll just put break. Well, breakout. Breakout, question mark. Are we breaking above a range? Do you see that? Might we see strength in energy? Could that direct us towards maybe some ETFs in the energy field? Perhaps, right? There are some. Consumer discretionary. There are ETFs for each of these, by the way. But look over here with me. We don't discuss those, in this class. We have an ETF class, but there is, like, consumer discretionary. What I said was flag pattern. And if the whole discretionary group within the S&P 500 is showing the possibility of a flag, don't you think there might be some stocks within that group also showing a flag? Yeah, a lot of times there are. They mirror the collective nature of the index itself, or in this case, the sector index, right? And I said over here on consumer staples, which is more defensive in nature, I just said change in trend, because look what we're doing. That trend line is just on the verge of getting broken, and we could start to tick up here. So This is a cool way, just using a grid like this to kind of help you focus and narrow down maybe some of these other groups. And maybe you spot something over here too. But generally, to get a whole sector indice moving higher, a lot of times what you're going to see is oftentimes it's fundamentally based. And sometimes the fundamental trends, I'm talking the growth of a given sector, the strength they're seeing, can be enough to help facilitate an extension of an upward trend or a downward trend for that matter. Okay. So in both cases, upward trend or downward trend. And so sometimes when you look at these longer term charts and trends on a sector, there can be that fundamental connection there. And you might just see a lot of growth. Earnings could be really positive. I mean, would you say that earnings just did really terrible over here? Probably not. We broke above some highs and now we're kind of flagging. This is maybe one of the stronger sectors in the market, as well as, well, financials. I didn't choose all of them, but I just chose a handful. Industrials too, quite strong. Others, weak, right? Weak over here. We'll see what happens with those. But hopefully that's helpful for you. Can I have the chart? Absolutely, you can. In fact, let me just share it right now. It's not like a script. These are just charts, but we always say, anyways, with our scripts that they're not guaranteed for timeliness or accuracy, but it's not really that. It's just a something else, right? Hang on, I'm sorry. There we go. I'll share this. I'll put the link right there. And now you've got it. So there is the grid. You pull that up and you'll have a grid there, and you can just save that and use this in your grids over here, which I do. Okay, cool way to get into it. I want to talk next week about getting more into some of the stocks behind these sectors as well. But yeah, a lot of interesting things. I'm going to stay definitely focused in this class on that each week as we get into these in more detail, because it is getting interesting. We're getting a few different indicators popping up here and there. We'll keep tabs on this, folks. But as always, great to be with you. Bottom right-hand corner of the screen, be sure and hit that subscribe button. And if you like today's presentation, really appreciate the like. If you wouldn't mind doing that. If you find this kind of content useful, help the YouTube algorithm to keep the content coming up more frequently. All right, everybody. Well, on that note, thank you, Cam, for your help in the chat, and good to see you all. See you next time.